Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. Second day of November 2018, and this is the daily report for gold and silver. After yesterday's dramatic $22 climb, we do have the market softening just a little bit, down $4 in terms of its current fix at $1,234.60. We are along this market, and we are along just below current pricing. Of course, we will talk about that in detail as we pull up our technical studies. Silver gave back some of its impressive gains of yesterday, only about 3 cents, and it's currently at $14.74.5. Platinum and palladium both gained on the day, with platinum gaining about $9 at $8.72. and palladium gaining almost 2%, a $21 gain at $1,102. It is getting closer and closer to being within parity of gold, and I believe that that is inevitable. Now, the dollar index itself offered some headwinds as it moved back higher after yesterday's dramatic decline, about a 0.25% gain, 22 points, above 96 at 96.31. Now, in terms of U.S. equities, they were all lower on the day, with the Dow Jones Industrial Average losing 109 points, 25,270. The Standard & Poor's vis-a-vis the E-mini losing 15 points at 2722. And lastly, the composite giving up over a full percentage, 77 points, and closing at 73.56.99. Traders, even with yesterday's respectable, substantial gain, we did have gold close in essence unchanged, but slightly lower on the week. We are looking at a weekly candlestick chart, and we can certainly see that following 4 consecutive weeks of green candles, meaning a higher close than Monday, that ended today as this market closed in essence unchanged at 1234.60. What is most noteworthy about this week's move is this lower low that occurred, and it really is one of the first occurrences of a lower low by any kind of means in the last month and a half. But traders, the real activity this week was the dynamic move that we witnessed yesterday, and that in fact was absolutely a saving grace to what could have been a devastating week, moving gold prices lower and keeping them lower. Because if you recall, this is Thursday, we've got Wednesday's candles, Tuesdays, and Monday. So on Friday, we had the highest high that we had in some time. The market actually came into 1245, and that is a Fibonacci harmonics. The harmonics is this top right here, as well as it being the 0.618% retracement from a much longer data set. From 1245, the market traded as low as about 1212. That is this low. So what we saw is on Monday, Tuesday, and Wednesday, consecutive lower pricing, all red candles. That all changed yesterday because we had this dynamic move in which the market opened just above the previous close, but closed dynamically higher. And what was so impressive is that it took out the losses from Monday, Tuesday, and Wednesday, all in one trading day. So today, the fact that we were witnessing a very quiet day where the market in essence opened and closed at the same price does not surprise me that much. It's kind of catching its breath and finding footing, because the way that I look at this market long term is that what we have been seeing is really a series of stair steps. And here's what I'm looking at. Considering that the market was in a long and protracted corrective period, a sell-off, and that sell-off, once it passed the 78% retracement area, actually put us in a corrective mode and in a bearish market sentiment. This is the lowest trading point that we saw gold trade to this year. It made an immediate stab to come back above this key and critical level. This is the 0.78% retracement at 1212, but it was marred by the fact that it had multiple occasions in which it tested and attempted to trade above this price point, and in each and every case ineffectively. The market then tracked back down to lower pricing, but as I said, that all changed in October on the 11th when we had this $30 move. Because what that did is a couple of things. First of all, it was under $1,200, so we broke above that key psychological level. We also broke above the short-term 50-day moving average for the first time in quite some time. And then, in essence, what we did is we took our next stair step. And what I mean by that is as follows. This market doesn't tend to move straight up or straight down unless you're looking at a parabolic market. So what you tend to get is a price spike, that's this here, and then it forms a new base at this higher level, and it will maintain in this area with a narrow and tight trading pattern until it hits the next step. The next step came, and that took us to yet a new price level, and then that was followed by a period of consolidation in which the market once again trades in a narrow and defined range, but that narrow and defined range is at a higher price point than the previous price point. So you've got a higher price point here that is higher than here, that is certainly higher than these lows here. That being said, what are we looking at for next week? We did take a stab at this market. We did go long. We are long just below this, I believe at 34.30. And we have some key critical events coming up next week. The midterm elections along with an FOMC meeting. If we get an election that results in a mixed bag of control in the Congress or the Senate, that I believe will be extremely bullish for gold because it creates uncertainty. It creates the harder ability to get things done, and that could certainly affect gold on the bullish side. Depending on what the Fed says, that will also give us some indication as to whether they're going to stay the course or maybe kind of loosen that hawkish tone that we've seen over the last couple of months because of the meltdowns we saw in U.S. equities this month. We will have to see. For right now, my recommendation is to maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.